Good morning, good afternoon, and welcome to the March 2024 WASDE Review webinar. My name is Andy Miller with DTN. I'll be your moderator today, and with me as always is Todd Hultman, Lead Market Analyst for DTN. During this event, all participants will be in a listen-only mode. However, you can ask questions at any time. To do so, please click on the Q&A section, the Q&A button on the bottom right. And this will open a panel where you can enter your question, and Todd will address those at the end of the presentation after he's finished his report. This event is also being recorded. We will have a rebroadcast of this session on DTN.com within the next 48 business hours. With that said, I will turn it over to Todd.
Thank you, Andy. Hello, good afternoon, everybody. Thanks for joining us today for this look at the March WASDE report from USDA. I think you'll find not too many numbers or changes in this report, and things are very simple this time around, as it always tends to be in the month of March. Of course, the focus is where the crops are growing, and that happens to be Brazil and Argentina right now. So that will be much of the attention today. Let's go ahead and dive in and see what USDA said. We'll start with corn as usual. And here's the USDA US balance sheet from USDA, and the far right column are today's new numbers for the month of March. The middle column is a month ago, February estimates, and the left column is a year ago. As you can see, pretty simple here. All the estimates for corn were kept unchanged. I thought that the USDA had an opportunity here to raise the export estimate, as corn shipments are up 33% from a year ago at this time, and have a nice comfortable buffer above USDA's estimated pace. But USDA decided to keep their export estimate unchanged, 2.1 billion bushels, and they kept the ending stocks estimate unchanged at 2.17 billion bushels also. They did lower the average farm price a nickel, looking at 475 now for the current season. I can't think of too much else notable there, other than corn exports are in good shape, so it wouldn't surprise me if we don't see an increase in the estimate next month, but we'll just see what USDA decides on that. Let's turn now to the world balance sheet, and here you see in the upper right-hand corner, USDA lowered its ending stocks estimate for the world from just over 322 million metric tons to 319.6 million metric tons. That was a little less than the trade was expecting. Analysts in Dow Jones were expecting 320.7, so it's a full million metric ton less. Not a large amount by any means, but a little better shape. You can also notice if we exclude China's stocks, which we'll look at in just a second, the ending stocks estimate was reduced from 110.2 down to less than 108 million metric tons. So that also carried through when we exclude China. There were a few things to note here that accounted for the changes. First, if you look at the top left corner, we note that beginning stocks were actually increased by 1.4 million metric tons roughly. And as I look back to the previous year, I found that China increased its estimate of last year's corn production for Argentina. So instead of 35 million metric tons, they say now that Argentina had a 36 million metric ton crop. So that added a little bit to the supply. Now let's look at the second column, and these are the production estimates for the main players in corn. And we'll just start at the top and work our way down. For the current season, also in Argentina, we see another million metric ton increase from 55 to 56 million metric tons for this year. That one I think is no surprise, as everybody knows that Argentina has very good crop conditions right now. Their corn is rated 87% fair to excellent, according to the Buenos Aires Grain Exchange. So they're in very good shape, and our meteorologist, John Brannick, tells me that they have good chances for rain in the forecast for the next week ahead. So that crop seems to be continuing to do well this year. A bit of a surprise here, USDA did not lower its estimate of Brazil's corn production. It's staying with the 124 million metric ton estimate. That works, that's over 4.8 billion bushels, and it's much higher than everybody else, which is why it surprises me that they haven't come down more. Brazil's crop agency, CONAB, is estimating just under 114 million metric tons. So they're 10 million metric tons lower than USDA. And frankly, considering all the weather problems and challenges that Brazil has had with their first corn crop, and now the uncertainty of what we have being planted for a second corn crop, I have to say I continue to think that Brazil's CONAB agency at 114 million metric tons is probably a much closer to the truth number. But I can't explain why USDA is staying as high as they are, but they are, and they have the right to their opinion, I guess. Let's move down again. We see some minor changes in some of the smaller players in corn production. The corn production estimate for Russia was reduced from 17 to 16.6. For South Africa, we saw a 1.3 million metric ton reduction to 15.5. And for Ukraine, they took that crop estimate down a million metric tons, down to 29.5. However, direct your eyes to the right now, the second column from the right, and we'll look at the export totals and see that along with Argentina's increased crop estimate, they also increased the export estimate a million metric tons. That's common. But for Ukraine, even though Ukraine has a smaller corn crop estimate now, USDA still increased the export estimate from 23 to 24.5. So we've seen this for several months now, and we'll see it again when we get to the wheat numbers also. Ukraine has done an excellent job in exporting, shipping their grain out of the country. They've taken control of that western side of the Black Sea, and that's given them leeway to safely move their grain. So that's been a big benefit for Ukraine just the past several months, and we see evidence of that again here in today's report. So overall, a lot of small changes, still stuck with, I think, a higher than need be estimate for Brazil's corn production. Time will tell who has the closer estimate on that. I continue to think Brazil's CONAB is probably doing the better job, but we'll see how that plays out. The end result, today's ending stocks estimate down a few million metric ton. As I said, when we exclude China, there was a reduction of roughly 2.5 million metric tons. And that brings us to this chart. So it gives us an assessment or a way of comparing world ending corn stocks, excluding China, what they look like. And again, we exclude China. I consider this the more important metric for looking at corn's world supplies because number one, we're not confident about the number that is given USDA for China. And number two, China doesn't export much anyway, so or almost nothing. So it doesn't really matter how much supply China has. We're more interested in the exportable total. And so as we look at that number right now, the current estimate of ending stocks in the world, corn stocks aside from China, is 4.24 billion bushels. That's represented by the red bar on the right. It happens to be the most in 5 years. So really after 3 years of lower corn supplies and a tougher production situation around the world, we're getting a bit of a rebound in this year's world production, and that continues to be true. This is the corn basis. And I apologize if you've never seen this chart before, but all the black squiggly lines are the basis levels for the past 10 years. The red line is where we're at today. Our DTN corn index was priced at $4.10 a bushel last night. That puts us 28 cents below the May futures. So that basis is, I would say, roughly in the middle of the pack, but it's about a nickel below the 10-year average for this time of year. The encouraging thing about the red line basis that you see there is that it hasn't stopped going up yet. It's still gradually showing some improvement as we get more into the season, and that's interesting. Corn exports. This is what I was talking about earlier. Our shipments to date, 841 million bushels of corn, are represented by the red line. And as I mentioned, that's up 33% from a year ago. Last year's exports are represented by the green shaded area. So there you see we have a significant lead over last year's pace. The current estimate is 2.1 billion bushels. USDA didn't change that, but that estimate is only up 26% from a year ago. So as I say, we have a pretty good cushion there, encouraging USDA to increase its export estimate in the months ahead. Now, as good as the exports have been, we have to note they're still slightly below the 4-year average. So again, this has been a good scenario for corn exports this year, but nothing great or out of the ordinary. How about China's corn purchases? I always like to check in and look at the price of corn from China's perspective on the Dalian exchange. That's the upper chart. And also from Brazil's perspective, which is the lower chart, the Bovespa exchange. And here we see that even though corn prices in China got beat down basically in December and January, and that coincided with them bringing in a record harvest, we're told. And prices seem to go along with that information. There's been a nice rebound since mid to late January in the corn price. And what I pointed out all along is that the price of corn in China still has a significant premium over everybody else. This morning's price is the US equivalent of $8.73 a bushel on the Dalian exchange. And that just tells me that they continue to have a need to buy corn. So even though they had a record crop this year, their demand is even bigger, and they've been more active buying corn. Now, some of that corn, or quite a bit of it, they've bought from Ukraine. Earlier, they bought corn from Brazil, but there's also a good chance that they'll be more active in our U.S. markets. And we've seen lately the basis levels on the PNW pick up. So it does seem like there's still some corn interest for China, along with everybody else. Of course, the number one buyer this year has been Mexico, and that's been a nice gift since you don't have to navigate the Panama Canal or Red Sea to get it there. In the lower chart, the South American perspective of July corn, we see a big sell-off since the first of the year, and frankly, that coincided with a lot of beneficial rains that we saw for central Brazil. And so that was taken as a bearish introduction to the new corn crop, which is being planted. The safrinha corn crop, the larger Brazilian crop, is being planted as we speak. But the concern we have there is that Brazil's rainfall totals have been less than average this year. They were still enough, it looks like, to produce a pretty good soybean crop. But that corn crop planted this time of year really needs that early soil moisture, because one of these days the rainy season's going to end and they're just going to turn dry for the next several months until September. This year there's a chance that that dry season may come earlier than expected, and so we're going to be watching, especially as we get into early April, what the forecasts look like for Brazilian corn. But right now, for the most part, we've seen a bearish response in South America to their expectation for the corn crop. Ethanol margins here in the US, this is based on a weekly USDA report, and this shows that ethanol margins have actually been quite attractive ever since harvest time. But I have to say those margins are narrowing as we get further into 2024. So back in September, they were I should explain, the blue line is the estimated value of corn. If you take that to an ethanol plant in the state of Iowa, you're going to get so much ethanol, so much distillers grains, and so much corn oil. That's corn's processing value. And today that number is $5.49. Well, with our DTN National Corn Index trading below $4 a bushel, there's roughly a nice $1.50 margin there for ethanol plants to work with and profit from. As I say, back in the fall, that was $3. So you can see that that's narrowing. There could be some discouragement of ethanol plants in the future from buying corn, but so far things have remained active. Gasoline demand this year, in spite of all the concerns about electric vehicles and all that change, gasoline demand's up slightly this year, 0.4% so far, but our ethanol production is up 4.6% from a year ago. So it continues to be slightly above USDA's estimated pace and has remained a very strong source of demand for corn through some very tough times here in terms of prices. Here is the price of corn as of last night. It doesn't show today's action, but as you can see, we've had a long downward slide basically since the month of December. It's been a long winter in terms of corn. And the red bars at the bottom of the chart are the speculative positions. And as you can see, they've been net short most of the fall to winter season, but their positions grew larger, especially in January and February. And just a week ago, they had the largest speculative position in corn on record. They pulled back slightly on that last Friday, and we'll see what the update looks like later this afternoon. But for right now, these prices remain beat down pretty hard by the specs. I still contend that we're at or near such a cheap area that we should be near long-term support. And I wouldn't be surprised if being higher 2 weeks now, if there's not a little more pressure on specs to lift some of their shorts. So we'll have to see how that plays out. But I continue to be encouraged that the demand side of corn has actually continued to be quite active through this time and should be helpful as we get into the next season. Okay. Oh, let me just check for a second. Right now, I show the price of May corn up 2 cents almost at 4.40 a bushel. So kind of a neutral response to today's report so far. Okay, let's turn to soybeans now. We'll look at the U.S. balance sheet. And same as corn, USDA made no changes to their estimates from February. We still have an ending stocks estimate in soybeans, 315 million bushels, and an average farm price estimate of $12.65. Now, obviously, we're below that at the moment, but that's where the average price is turning out so far. The concern I had for today's report was that we could have seen a reduction in the export estimate of 1.72 billion bushels. And I'll show you pretty soon that our soybean exports just have not been keeping pace very well. So we'll have to see, keep an eye on that. But that could be a risk in future reports. Otherwise, we're still at 315 million bushels. Now I'll take a look at the world estimates for soybeans. And there's some interesting changes in here today I'll try to explain. So in the upper right corner, the ending, excuse me, for soybeans, it's not an ending stocks estimate, but it's a world soybean stocks total of 116 million metric tons was reduced to 114.3 million metric tons. That was a little less than the trade was expecting, but actually it was pretty close to what the trade was expecting. Now, the changes that brought us there are a bit of a surprise story here, and it actually turns out to be slightly bullish for soybeans today. If you look at the upper left corner, that first column is beginning stocks. And if you notice, beginning stocks were lowered roughly 1.4 million metric tons. Well, that points to a revision from a previous year. And what I found was that in the year 2023, USDA had estimated China's soybean imports at just under 101 million metric tons. Today, they bumped up that soybean import estimate for last year to 104.5 million metric tons. So they actually made a 3.65 million metric ton increase in China's soybean import estimate for last year. Now, I suspect that what they're basing this on has something to do with Brazil's export totals and so forth. But it gives the view that China had stronger soybean demand last year than was earlier expected. At the same time, if you look at the third column from the left and all the way to the bottom, you'll see that China's soybean import total for this year was also increased, this time by 3 million metric tons from 102 to 105. Now, if you follow the arrow to the right, that coincides with a 3 million metric ton increase in Brazil's soybean export total. So you see the picture here. They're saying China had stronger demand. It imported more beans than previously thought, and they bumped up not only the current season 3 million metric tons, but they also bumped up China's soybean import total from the previous year. So they're painting a stronger demand picture for soybeans than before today's report. That's probably the main point of this. And because of that, soybeans are trading a little higher on the day. If I just check in here, sorry. No, May soybeans are up 13, November's are up 16 at the moment. And I think it's largely because of what I just explained here about this revision and higher soybean import totals for China. Now, that's not why everybody was interested in today's report. Everybody wanted to see what USDA said about South American crop estimates. So let's look at the second column from the left. Those are the production estimates. Argentina stays the same today, 50 million metric tons. Brazil's estimate was reduced from 156 to 155. And again, that estimate just falls flat on its face in my view. Brazil's crop agency is estimating just under 150 million metric tons. And there are a lot of private South American estimates out there that are in, let's say, roughly the 145 to 150 range. There are some lower, but I would say there's quite a few in the range of 145 to 150. So again, USDA is sticking with a higher than everybody else number, and it'll be interesting to see how this plays out. But it sure seems unusual that they're the lone eagle on this one. The Paraguay estimate, rounding out, stayed the same this year. So not much change in USDA's view of the soybean harvest from Brazil. And of course, that harvest right now is going on, and it's roughly halfway through. It's probably over halfway through after this week. They've had pretty good harvest weather. So that continues to be kind of an interesting story with a big disagreement between the US view and Brazil's view of its own soybean crop. The soybean basis is roughly right in the heart of the 10-year average for this time of year. Last night, the DTN soybean index was $11.09. That's 58 cents below the May contract. And if you compare it to all the other squiggly lines on the chart, you can see we're basically right in the middle, and that is very close to the current average. So in spite of the higher ending stocks estimate this year, we're seeing for soybeans, there still seems to be pretty good demand. And I have to think that our crush demand domestically is part of the reason that's holding up the soybean basis in its kind of normal levels at the moment. Here's the export pace for soybeans, and this is what I'm concerned about, bringing in a lower export estimate. The most recent report as of February 29, soybean shipments. Now keep in mind, these are actual shipments, not total sales, but the actual shipments of soybeans are just under 1.25 billion bushels. That's down 19% from a year ago. Well, USDA's export estimate is expecting to be down 14%. So we're trading below the estimate, but USDA chose not to make any changes to the export estimate today. still you have to wonder if there's not going to be something lighter down the road here. This is the most bearish concern that soybeans have had lately, but the good news is it's starting to show some improvement. This is a comparison of the March FOB soybean price in Paranagua. That's Brazil's second soybean port, and that's the brown line, versus the same price, that comparable price in New Orleans, and that's the green line. If you notice, the brown line, the Brazilian price had a sharp drop in the month of January, and that coincided with some beneficial rains that the crop received at that time. At one point, at the end of January, uh, their price was more than $1.50 a bushel below the U.S. And so that really exerted a downward pressure on our U.S. prices. More recently, we've seen a bit of a bounce back in that Brazilian price, and the gap between U.S. and Brazil has narrowed by roughly half. So today we're around 70 cents or so. Excuse me. Difference between the two, and I would suggest that that's a good sign and goes along with what we've heard in terms of rumors about China being a more active buyer of soybeans from Brazil lately, and that I see that as good news, even though it's Brazil's soybeans that are being bought. Any sign of good demand from China now for Brazil beans helps us down the road, because the quicker China works through Brazil's beans, the sooner they come to our markets in the fall. And if China starts buying from us in August and September, that's a very good sign. If we don't hear from them until November, then it's a little tough, and our export opportunity is pretty narrow. So we'll continue to keep watch on this price difference, but I would say it's encouraging, the recent narrowing that we've seen in this gap. Here's another encouraging chart, and this is the price of July soybeans on the Dalian exchange in China. And like the price that we saw in Brazil, there was a pretty steep drop in that Chinese price in the month of January. And that gave us concerns that China's demand may be softening this year. And we hear constantly about problems with their economy and what's happening there. But the soybean price has often told a different story. Well, this year it was a very concerning story in the month of January, but since early February, that soybean price has bounced back significantly. Right now, as of this morning, China's price was closed at the U.S. equivalent of $14.14 a bushel. That's much more encouraging, and I would say it's much a better sign of China's demand strength for soybeans. So it all wraps up in the big picture together. So you have USDA revising the soybean import estimate. At the same time, we see price evidence of China showing better demand for soybeans, mostly for Brazil at this point, but that's all good news for our markets as well down the road. So this is a bit encouraging. I have to wonder if it's helping our stop or at least slow the sell-off in our U.S. soybean prices at the moment. And I wouldn't be surprised if our U.S. prices don't start responding a little more to this after today's report. This is the other positive for soybean demand lately, and that's the crush incentive for soybeans. Somewhat like the ethanol margins, the margins here have also narrowed, but they still look quite profitable, and we continue to see good evidence of crush activity from the processors. The blue line here is from a USDA weekly report, and it answers the question: if we crush a bushel of soybeans, how much value do we get in terms of meal and bean oil and soybean hulls? And the answer as of last Friday was $13.91 a bushel. So that's a nice $3 spread above the cash price of soybeans nationally. And I think is one of the major reasons why crush activity is up over 4.5% so far this season above a year ago. and that's slightly above pace from USDA's estimate. So whatever concerns people have about the renewable diesel industry and the possibility of overdoing the plant expansions and things like that, I can tell you that right now the soybean processors are doing quite well, and that's a good green light sign for our domestic soybean demand. That's good news. The July soybean prices, this is as of yesterday, so it doesn't show today's increase, but as of last night, we were around $11.76. As you can see, soybeans have had a hard, long sell-off for the past 3 months. In that time, we've seen an increase of specs on the short side of the market. You know, they love to ride a trend, and that's what they've been doing. They go short, and as long as they get rewarded, they stay with it, and they even increase their positions. And so far, there's been no reason or pressure for them to get out. Well, that may be changing fairly soon. In today's environment, with the higher production costs and the everything that we have going on, $11.76 is a pretty cheap price for soybeans, and there's plenty of uncertainty still ahead. Okay, finally, let's take a look at what USDA said for wheat today. And here we actually do see a small change in the ending stocks estimate. USDA reduced the export estimate for wheat from 725 to 710 million bushels. So they took 15 million bushels off the export estimate. The sad thing to me is that 725 million bushels was already the lowest export estimate in over 50 years, and we had to lower it another 15. And so I'm sad to see that, but the numbers do bear out. This is a reasonable change in the export estimate. The wheat shipments so far to date are down 11% from a year ago, and we only basically have 3 months left in the wheat season. So I think their hand was a bit forced here to bring it down. The new ending stocks estimate, 673 million bushels, is is the third lowest in 10 years. It gives us an ending stocks to use ratio of 36%, and we have an average farm price still of $7.15, which many people would love to get today because we're trading far below that on the wheat prices. So it's been a very, very tough market. As we look at the world, this shows the various classes of wheat. So we had a 15 million bushel increase in the ending stocks estimate. How was that distributed out among the classes? 3 million of that increase went to the hard red winter wheat category. 8 million of it, the bulk of it, went to soft red winter wheat, and 4 million bushels went to the durum. So that's where the 15 million bushel increase went to. You've probably heard the last 2 days, China canceled roughly almost 9 million bushels of previous wheat sales of soft red winter to China. So that's been disappointing, and we saw Chicago wheat fall to new lows the last couple days. Although they're trading a little higher today, and I'll try to get that when we get to the end of the wheat here. For the world estimates in wheat, the upper right corner shows a slight decrease in ending stocks from 259.4 down to 258.8 million metric tons. That's just a very slight change. Same thing if we exclude China's ending stocks. There was actually a slight increase if we exclude China. So that's now 126.8, and I'll show you that chart in just a second. If we look at the production column, the second column from the left, we just see minor changes here. So in Argentina, there was a slight increase in their crop estimate to 15.9. They've had a better rain situation this year and should be off to a good start when they get going on their wheat crop. Australia, we heard from the government earlier this week that their new estimate is 26 million metric tons, and USDA went along with that. So there was a slight increase in that estimate. In Europe, there was a slight decrease from 134 down to 133.6 million metric tons. We heard about planting problems last fall, and so we'll have to see how their winter wheat looks when they emerge this spring. Russia, there was a slight increase in the wheat production estimate. Sad to say, it's not like Russia needs more wheat. They're already dominating the world in a pretty painful way. And lastly, Ukraine's crop estimate was kept the same, but if you look to the right, you'll see their export estimate was increased from 15 to 16 million metric tons. And that's that same situation where they're just doing a much better job of being able to hold off Russia with one arm while exporting their grain with the other arm. And how they do that's pretty remarkable, but they have done a better job of being able to export their grain lately. And then lastly, along with Australia's slight production increase, they also had a slight export estimate increase of 500,000 metric tons. So nothing too earth-shattering there. And as I say, we just have a slightly lower ending stocks estimate for the world. This is how it looks like if we compare it to the past 15 years or so. The red bar is the most recent. That's the current season. We've got 4.66 billion bushels of ending world wheat stocks when we exclude China. That's the lowest total in 15 years. In any other time, you would expect wheat prices to be trading profitably in this type of a world situation, and yet that's just not the case. With as Russia has dominated the export market and really sucked out the air from the export competition. Europe's exports are down. Ours, of course, are down, and it's just a much tougher situation to find any export business in. So it's becoming a very difficult predicament dealing with Russia in the world of wheat. The basis level for hard red winter wheat it may look average, but actually it's not. It's still pretty bad, to be honest, in terms of any indication of demand. Now it has improved over the past 2 months, so that is the good news. But as of last night, the HRW wheat index was at $5.28. That's 47 cents under the May contract. It's the fourth weakest level of the past 10 years for this time of year. So it is showing marginal improvement. We have seen a little more demand for HRW wheat, but it's still a very tough situation here. As far as the May Kansas City wheat price itself, as you can see, just month after month after month of lower prices, looking for support, but not finding it yet. Now we're getting down to very long-term low type levels. We're near the lowest prices in 3 years. I do find it interesting on a short-term level that just the other day, Kansas City wheat fell to a new contract low, but was followed the next day by a 20+ cent gain. So anytime the market probes for a new low and then gets rejected quickly like that, your antenna has to go up, as this could be a possible situation of support. But I know that may sound like crying wolf in wheat, as we've seen reversals and attempts at support fail for many months now. So we continue to have a market where the specs are being rewarded for staying short, and nothing to change that just yet anytime soon. Okay, in conclusion, today's report I would call mostly neutral across the board, not big changes, except for soybeans. I'm going to say slightly bullish because of those revisions USDA made to China's soybean import estimate, and just the indication that China appears to still have better soybean demand than expected. And that's, I think, a bit of a surprise to the market, as up until this report, the indications from China were very concerning, that it looked like maybe their soybean demand was softening. So as you saw, we also saw some price indications that it could be firming as well. So that's a little bit of encouragement to take away from today's report. Otherwise, the ending stocks estimates were unchanged for the US for corn and soybeans. And in the case of wheat, we did see a small increase in the US, but we had a decline on the world number. So basically neutral across the board. I wanted to point out our next webinar is March 28th. It's going to be the grain stocks and prospective plantings report. There's just traditionally always a lot of interest in how much corn and beans and wheat are going to be planted in the new year, and that'll be the report to address that. And then, of course, myself as an analyst, I always like the grain stocks report because they give us a solid indication of demand, which goes beyond just these monthly estimates that we get. So I hope you'll join us for that if you're available. And of course, as you know, if you're not at the specific time, you can always still register and watch a replay link later at your convenience. So Andy, if you've got questions, this is a good time.
Well, we had two, but you just answered one of them, which was about the actual plantings report. So there you go, covered that one. The only other question we had was, can you explain how in practice China can, quote, cancel sales?
Yeah. Uh, and it frustrates all of us. Let me just say that. And this is a topic we've talked about for years. But one day, as I was complaining about it in one of the pieces I was writing, I heard from a fellow who has a very strong background in international trade, and he actually served on a lot of the arbitration panels when things go wrong between exporters and importers. He was on one of those panels where they would try to work out the differences. And he let me know that basically, he said, Todd, it's really not that big of a problem. And what typically happens is for whatever reason, China changes their mind or whatever, but they typically quietly work it out with the exporter that they made the transaction with. Now he did admit that there were a couple times in the past where it did look pretty sketchy, the timing of it, and usually when it takes place, Andy, is when Brazil has cheaper prices than us. So there seems to be kind of a sneaky incentive, right? To, well, I'll just cancel my sale from 6 months ago and buy the prices cheaper in Brazil right now. And he did admit that there were maybe one or two times in the past, but he said it really doesn't happen as frequently as we all notice. That he would say 90% plus of these cancellations get worked out voluntarily with the exporter. So typically, I think what they end up doing is finding a different source for the grain to go to, and China makes up the difference to the exporter, or however they work it out. But anyway, it continues to be a source of frustration for all of us, and it seems like dirty pool and breaking rules that you and I couldn't do with our broker.
Yep, they do just play by their own rules, don't they?
Yeah.
Uh, well, that covers the questions we have, so thanks, Todd. I will use this opportunity then to say thank you to everyone for joining today. As a reminder, this event was recorded and we'll have it up on dtn.com within the next 2 business days. And Todd graciously has put his contact information here if you'd like to reach out with some additional questions that you have. So with that, I'll say thank you. That concludes our event, and we hope to see you at future sessions. Thank you so much. Have a great day and a great weekend.